Tesla just delivered 480,126 vehicles in Q2. That is a huge beat, but the stock still sold off. And to me, that tells us one thing very clearly. Wall Street is no longer satisfied with delivery numbers alone. HI, this is Ken. In today's video, I want to break down what really happened with Tesla this week, because on the surface, the story looks simple. Tesla delivered far more vehicles than expected. Japan, Germany, Taiwan, Colombia, and several other markets showed signs of recovery. So normally, investors would expect Tesla stock to move higher, but instead, TSLA dropped. So the real question is not, were deliveries good? The real question is, why did the market sell Tesla after good news? And if you own Tesla stock or you follow Tesla as an owner or fan, this is very important, because the next big test for Tesla may not be deliveries anymore. It may be margins, Robotaxi, FSD regulation, energy, and real proof behind the future story. Let me start with my main conclusion. This week confirmed that Tesla's EV demand is recovering, but it also confirmed that the market has raised the bar. Q2 deliveries were strong. 480,126 vehicles is not a weak number. It shows that Tesla's core EV business is still alive and still powerful. But Tesla is not priced like a normal automaker. Tesla stock already includes expectations for FSD, Robotaxi, Optimus, energy, AI, insurance, software, and supercharging. So investors are now asking a different question. Not just how many cars did Tesla sell, but how much profit did Tesla protect while selling them? That is the key point. At the beginning of the week, Tesla stock started to move higher. The reason was simple. Investors were expecting a better Q2 delivery result. Sales data from Europe, China, and other international markets started to look stronger than expected. Some analysts raised their delivery estimates, and the market started to think maybe Tesla's EV business has bottomed. Maybe the worst is already behind us. That expectation became the first fuel for the stock rebound. There were also other positive headlines, including FSDV 14 Lite for HW3, Cybercab public road testing, and the NHTSA closing a power steering investigation. So, before the official delivery number came out, the stock was already moving on hope. Then, on July 2nd, the mood became even more bullish. European registration data showed clear improvement. This was important because Europe had been one of Tesla's weakest regions, but April, May, and June all showed signs of recovery. That changed the market's psychology. Investors started to think maybe Europe is no longer the big problem. Maybe Tesla demand is recovering faster than expected. That helped push Tesla stock into the $430 range. But here is the important part. At that point, the official Q2 delivery number had not been announced yet, so the stock was not rising because of confirmed results. It was rising because investors expected strong results. That setup matters, because when expectations become too high, even good news can become dangerous. Then, Tesla announced Q2 deliveries. The number was 480,126 vehicles. Model 3 and Model Y deliveries were 467,762. Other models were 12,364. Production was 451,758, and energy storage deployments reached 13.5 gigawatt hours. This was a very strong result. Compared with market expectations around the 400,000 range, Tesla delivered a major beat. So, from a business perspective, I think we should honestly say this was positive. Tesla's EV demand did not collapse. The core business showed real strength, but the stock dropped, and this is where the deeper story begins. There are two main reasons why Tesla sold off. The first reason is simple: buy the rumor, sell the news. Tesla had already rallied before the official number, so when the strong number came out, short-term traders took profits. That is normal market behavior. But I do not think that explanation is enough. The deeper reason is that investors are now looking beyond deliveries. A strong delivery number is good, but if those deliveries were supported by discounts, promotions, or inventory clearance, then margins could be under pressure. And for Tesla investors, margins are extremely important because Tesla's valuation depends on more than volume. It depends on profitable growth. So the real question is not only did Tesla sell 480,000 vehicles. The real question is, did Tesla make enough profit from those 480,000 vehicles? This is why Q2 earnings may matter much more than the delivery report. The delivery number tells us demand is recovering, but earnings will tell us the quality of that recovery. Did automotive gross margin hold up? Did Tesla need aggressive incentives? Did energy contribute meaningfully? Did operating leverage improve? These are the questions investors will focus on next. And in my view, this is the real reason the stock reaction was weak. The market is not rejecting the delivery number. The market is saying, show me the profit. Still, we should not ignore the regional strength. Japan was especially impressive. Tesla Japan registered 3,997 vehicles in June, setting a new monthly record. Q2 sales in Japan also became very strong, and 2026 first half sales already surpassed the full year level from 2025. Germany also showed a major year-over-year rebound in June. Taiwan saw Tesla become the top imported car brand by new registrations, and in Colombia, Model Y continued to perform extremely well. This matters because Q2 strength was not just one market, it was supported by multiple regions. That makes the delivery beat more meaningful. But again, the next question is margin. Strong sales are good, strong sales with healthy profit are much better. Beyond deliveries, Tesla had several important long-term stories this week. FSD remains one of the biggest ones. In the United States, Tesla is already pushing forward, but in Europe, regulators are still focused on safety, responsibility, and approval conditions. This matters not only for Europe, but also for countries like Japan. The next stage of FSD is not just technology, it is regulatory acceptance. That is where Tesla needs to prove safety with data. Robotaxi is another key area. Cybercab road testing and new robotaxi-related headlines show that Tesla is moving from concept to real-world validation. But investors need more than headlines. They need evidence of scale, safety, and future monetization. Robotaxi is one of the biggest reasons Tesla trades at a premium, so the market wants proof. Energy also deserves attention. Tesla deployed 13.5 gigawatt hours of storage in Q2. That is a major number. If energy can become a larger profit pillar, it could change how investors value Tesla. Supercharger growth also continues, with 2,700 new superchargers added globally in Q2. These businesses support the idea that Tesla is more than a car company. But again, the market is asking for financial impact. Optimus was a more realistic part of the week. Elon Musk pushed back against some overly optimistic expectations and suggested production may start slowly. I do not see this as a major negative. I see it as expectation management. Optimus could be huge long term, but the market now wants realistic timelines, not just imagination. So here is my final view. Tesla's Q2 delivery number was strong. The sales recovery is real, but the stock reaction shows that the next test is different. Investors now want margins. They want Robotaxi proof. They want FSD regulatory progress. They want energy profit contribution. And they want realistic Optimus execution. So for me, the real turning point is not the delivery report. The real turning point is Q2 earnings. That is where we will see whether Tesla's recovery is only about volume or whether it is becoming profitable growth again. What do you think? Was the TSLA sell-off just short-term profit-taking, or is Wall Street raising the bar for Tesla? Let me know in the comments. And if this video helped you understand the bigger picture, please hit the like button and subscribe to Life in the Future. Thanks for watching, and let's keep watching the future of Tesla together. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.